Everything's been happening so fast every single day. One crazy thing after another. But before we get into this first article, we have some XRP news today. We have some Bitcoin news today. We have some commodities news today. All right. Now, this first article, see, my mind just works a little bit different. So the first article was titled, Lockbit Ransomware Gang Claims to Have Hacked U.S. Federal Reserve. Hold on, because I know you may have heard about this. It's been hot news the last day or so. But I'm not concentrating on if it actually happened, if it didn't happen. That's what everybody else is doing already. That's inconsequential to me. What is interesting is the reaction of the people. There's no way to verify right now unless this information that they claim they've hacked is released, whether it actually occurred or not. So let's put that to the side. But what if? See, I think psychologically, I think I operate from the viewpoint of minds. And I ask myself, if one wanted to test the minds of the people and see how they wanted to react, how would they do it? So many of the other banks have been hacked and they have been ransomwared. OK, many insurance companies have been hacked and ransomwared. I've been covering that for a long time. And when it happens, it's a very minimal effect, but there is an effect of people distrusting the system more, disliking the legacy system more. And I think if you're a bad guy who's playing a game of chess, I think that's more important than the actual information that's being acquired, if it's being acquired. Why? Because if your end goal was to institute a new system, you have to turn the people against the old system. So the more that you tell them that the systems have been compromised, the more they will turn against that system. And the more you do it, the more you're able to observe the conditioning that you have been exacting upon them, the effect of the conditioning. What if these types of pieces of information, I mean, this doesn't have to have actually happened. That's not what's important, but the headlines are. Once you put the headline out there, then you get to observe the reaction of the people. Is there more deposit flight? Do they rush to commodities more? Do they use alternative systems more? And so do they run to shadow banks more? There's a huge shadow bank problem that they've been dominating. So-called shadow banks, non-banking financial institutions have been dominating. Do they run to them? You get to observe a ton of information just based off a headline. And that information alone is priceless. But see, most people they're just concerned right now with it didn't happen. It didn't get hacked. Or it did get hacked. I'm right. No, I'm right. I'm wrong. They get caught up in this argument, this argumentative nature. And their ego has taken over. It's blinding them to the aspect of, wait a minute, maybe there's something more here. Maybe someone put out, a little bit of bait to observe the movement of the fish. You just dangle a bait a little bit. And you watch which fish bite. Where do they move? Where do they come from? You get what I'm saying? There's so much information that was gathered from these headlines and continues to be gathered. I think that's as we move towards the new financial system, I think you're going to see the continued rapid tearing down of the legacy system. And it's not just, I'll say this, I'll go a bit further. Like what Kendrick Lamar said, the rabbit hole goes further, I promise. I think there's a new system overall that they want to institute. I think the powers that be, so-called powers that be, want something new across the board. Why do I say that? If you observe, it seems that everything that was traditional is being torn down. There's celebrities falling from grace one after another. Never seen anything like this before. I've been around for a long time. Observing is what I do. Analyzing is what I do. Since a young age, my father taught me how to be a researcher. I've been doing this since my teen years. I've never seen so many celebrities fall from grace. Industries, the music industry has fallen. Hollywood, the movie industry has fallen. The financial systems are in a dilapidated state and they're falling. But here's the thing. It seems that they're being torn down. There are catalysts being instituted. This is not a regular breaking down of the system. It doesn't seem that way. It seems very much that all of this at one time is being orchestrated. I'm calling it how I see it. Little pieces of information put out here. The people react to it. The people are being moved this way or that. Now, what is at the core of all of that? When you boil all of that down, what do all of those things have in common? At least one of them. One thing. Lots of value. Control over lots of value. Mind-blowing value. Which right now, because of the new financial system, this is what people are not seeing. Because of the new financial system, you can not even funnel all of that value. You can access all of that value all together instantaneously. People are not seeing this. And I think one of the early precursors to the digital takeover of value that can be widely observed is streaming services. Now, before, and I'm going to take the music industry as one example. Before streaming services, musicians made a lot of capital. Now, before streaming services, musicians made a lot of capital off of solid CD sales, etc. But when streaming was brought in and music was fully digitized, now only the companies make the big money. They pay the musicians like sometimes 0.001 of a penny per 500,000 stream, 0.004. It's ridiculous. Whatever the payments are, the musicians aren't making capital like that. When a musician is making capital, or they're perceived to be, a big shot musicians now, it's mostly off of money that's loaned to them that they have to get back off of the album sales, just to pay that off, and then whatever's left over is broken down amongst them and their team. But it's not what it appears to be most of the time. But the industry took over the bulk of money making from music via streaming. I'm going to assume that there are certain mechanisms that are in the movie industry that are similar to that. This all leads back to the new financial system. I'm telling you, those are the precursor tests to the value that you can extract, control, access through fully digitized systems. Those are just electronic systems. Let's be real. Digitized systems give you even more access to value than that. More control than that. I don't know. I'm playing with these thoughts. Can you imagine when they mainstream NFTs and they have NFTs for everything? You see what the regular people are charging for some of their NFTs? Can you imagine the industry? They know what they have. They know what they're taking over. This is why you have all these big timers, so-called big timers, talking about NFTs lately. So now circling back around, they're making the house look dirty, for lack of a better word, in my humble opinion, observing the reaction to the filthifying of, if that's a word, filthifying, to the filthifying of the house, while they're taking over the house. And later on, let's watch if they present that, they clean up the house, present it to the people, present a solution. I think this is a big part of it. You see, if you're a master at war, there's a lot of different ways you can approach it, but you usually will approach a battle with a multi-pronged strategy. The new financial system is no different. You'll make yourself look weak. That's the first thing. You'll make yourself look weak when you're actually strong. Your methods they'll be consistent, but they won't appear to be. You'll do one thing here, you'll retreat. It's like guerrilla warfare. Then you do something here and you'll retreat. You do something here, you'll retreat. And it keeps the people off balance. The people are they wouldn't know what's going on. I'm watching this. It looks like that's what's going on. This is just a piece of it. Just a piece. So then there's the pressurization of the people to keep them distracted heavily. You know what? I want to go deeper. I really do. But let's get to some of these articles. I really could go deep, but maybe I'll do that in the members only section. So now, in everything I talked about, if you read The Art of War, this is basic stuff. If you read The Art of War or anything by Machiavelli, this is basic stuff. I'm not saying anything new. These techniques have been used for millennia. So now we're going to move on to a little bit of regular news here. So now this article here is titled Lead Game Designer Forecasts XRP to $250. I'm not saying I agree with it. I'm not saying it can't reach that. I'm simply reading the article. You don't have to start typing. All right. You don't have to believe that or agree with it, but I'm going to read the article. I like to read articles like this. I read articles where there's a low price. I read articles where there's a high price. I'm balanced. All right now. So, and pardon me today because there must be crazy pollen in the air. I did not expect this. So I have some allergies popping off. All right. I may sound a little bit different today. I don't know how I sound through the microphone. Okay. It says here, Chad Steingraber predicts XRP will reach $250 by 2025, citing upcoming stablecoin regulations as a potential catalyst. What do you mean? Are you saying something similar to what I was saying the other day in the last few videos? Chad Steingraber, an XRP community figure and lead game designer, recently sparked discussions with his bold prediction that XRP could hit $250 by 2025 despite lack of concrete reasoning. Wow, that's pretty harsh to say. Despite lack of concrete reasoning for the forecast, his statements have stirred up speculation within the community. All right. That's pretty harsh. Jeez. Like, why do people do that? If you disagree with somebody, you don't have to assault them. Verbally assault them. You don't have to call them names like we're in middle school. You don't have to defame them. I don't understand that. That part of humanity, I just don't like. It's like we can't get out of kindergarten. We just can't. Humanity is stuck in a sophomoric phase where they just, bulk of them just want to fight, call each other names. It's just so boring. I'm just tired of it. It's like we're supposed to be adults. So is there not another level? There must be. There must be. I don't know. Steingraber suggested that XRP would initially climb to $20 and $25 with most investors likely to sell at that point. Nope, they're selling way earlier than that, bro. That's how I feel. They're selling way earlier than that. Then it says another enthusiast speculated that many might sell at even lower prices due to frustration. Okay, so that's more where I am, right? It's not, I don't even think it's frustration. Frustration? Let's keep it real. Most of these people are struggling. The United States and a lot of places around the world are having a very harsh economic time period. There's no way you're getting around it. No way. Go walk in any city anywhere and you tell me they're not feeling the pain. Go to the big cities where their rent is more than some people's mortgages. You tell me they're not feeling the pain. Where a little basement apartment, people are paying like $2,000 or north of that sometimes for these little apartments. People are moving back home with their families. No, listen, not frustration. They'll need that money. Literally. That's the real. And it's like people don't want to talk about what's really going on. It's like people are afraid. But if you don't acknowledge the problem, how can you solve the problem? I don't care, bro. Like, I'm not a coward. If there's a problem, I'm going to confront it head on. Whatever happens. I'm going to do my absolute best to assess the situation and approach the problem best that I can. But I'm not going to run from it because I know running from a problem only allows it to grow. Same thing with the jobs market. People don't want to admit there's something wrong with the jobs market. There's an illusion there. ghost job postings where they don't hire people, but they take them through the interview process. They're interviewing a person 5-6 times and then don't hire them to make the company look like it's doing well when it's not. They have 3, where before they had 6 people doing a job. Now they have 3 people doing a job, but those other 3 people are doing a job of 2 people. There's so many things going on right now. They're going to take profit at a low place with no regrets. So prepare for it. Prepare for it. You know, if that's something that really matters to you, it really don't matter to me. I don't look at XRP as being moved by retail. I never did. You got to know where you stand with XRP, what you believe about XRP. That's why it's important to do your own research. But XRP, in my opinion, is made for the banks, for the big companies. They will be the ones who move the price. If retail was going to do it, it would have already happened. Even Brad Garlinghouse alluded to it. He was saying in an interview recently, he says something akin to, I'm paraphrasing, that he was disappointed that XRP had the clarity that it had, but its price wasn't moving too much. It was something like that, which was basically saying, hey, retail is not doing anything with XRP's price, and they're not using XRP like a lot of people claim they want to do with crypto. Talk is cheap. So then what can be a catalyst to move the price? The big companies coming in. That's it. Banks, institutions, governments, whatever. For XRP to serve the purpose it always did. Is that not reasonable? Is that not logical? So it continues on here. It says market timing and regulatory influence. The debate around XRP's future intensifies. So they said that he has something to say about stablecoins. That's what I really wanted to read. It says Steingraber responded by emphasizing the importance of stablecoin regulations, which he believes will be a catalyst for XRP's rise, possibly by the end of the year or early next year. But elaborate a little bit. What do you mean by that? Steingraber has been vocal about XRP's potential before. They don't elaborate on what he means by stablecoins. I mean, I don't know if that's deliberate. They're just deliberately cutting something out, or just maybe he just didn't elaborate. I don't understand that. Maybe we'll get a little bit more information later on. I need a lot of information on these types of things to really make a firm assessment on what someone is trying to convey to me or why they say what they're saying. But see, that's why I like articles like this. It gives you something to think about. It gives your mind some work to do. I like my mind to work. I like new things to play with mentally. So this next article is titled German Government Offloads 900 Bitcoin, 400 BTC sent to Coinbase and Kraken. The added selling pressure from the German government could tank Bitcoin price below key $60,000 mark. This happened 11 hours ago. It says here, a German government labeled cryptocurrency wallet has sold over $54 million worth of Bitcoin. The German government's wallet sold 900 Bitcoin in 3 individual transactions on June 25th. The first 200 BTC transaction was sent to Coinbase Exchange, while the second 200 BTC transfer was sent to Kraken Exchange. However, a third transaction worth 500 BTC, or over $30 million, was sent to wallet, quote, 139PO, unquote, which remains unknown according to on-chain intelligence provider Arkham Intelligence. While wallet 139PO remains unknown, it is not the first time the German government has interacted with it. The German government previously sent 800 Bitcoin to the address on June 20th and another 500 BTC on June 19th, just 6 days ago. Following today's transfers, the wallet still holds 46,359 Bitcoin, according to Arkham Intelligence. And it just happens that all of these big entities are selling at the same time, huh? Nothing more to it. They just all need money right now at the same time. Not 2 months ago, not 3 months ago, not a month ago, not 2 weeks ago. Just all at the same time in the last week and a half. Right. Come on, there's something more to it. There's something big going down. My humble opinion. So, now this article is titled Bitcoin taps 62K as 6% Bitcoin price rebound runs into stubborn US dollar. Bitcoin's price recovers from 7-week lows, but Bitcoin is not the only asset attempting to break higher. It says Bitcoin, which it has a price of $61,882. Is that accurate? I haven't looked at the charts today at all. It says returned to $62,000 on June 25th as markets slowly clawed back, lost ground from the weekly open. Data from Cointelegraph, Markets Pro, and TradingView showed BTC price strength staging a tentative recovery after the Wall Street Open. Bulls had suffered the day prior as a trip to 7-week lows of $58,500 sparked a cascade of capitulations. Bitcoin's relative strength index, RSI, reading on the 4-hour time frames hit its lowest levels since August 2023, the last time BTC/USD gave up bull market support lines such as the short-term holder aggregate cost basis, quote, range held where it needed to, unquote. Popular trader Dan Crypto Trades confirmed in one of his latest post updates on X. It says here, data from monitoring resource CoinGlass put total BTC long liquidations for June 24th at just under $150 million. Quote, massive liquidity zone at $65,000 and all the way up to that point, unquote, Dan Crypto Trades continued. Quote, I think that would be a good level in the short term to target and see how the market looks by then. Invalidation is losing the range low at 59K. All right, so now we're going to move on to this next article here. More Bitcoin news. If it'll pop up, I don't know what's going on with this website here. So, this article is titled, Top Trader Says Breaking Parabolic Trend a Positive for Bitcoin. A trader known for making timely Bitcoin calls says that the current Bitcoin correction is healthy for the long-term uptrend of the crypto king. So, this is coming from pseudonymous analyst Dave the Wave. I think we've heard from Dave the Wave before, yeah, because he has a real cool name, right? According to the crypto strategist, Bitcoin's price action suggests that more consolidation is on the horizon, allowing BTC to build a better base for a stronger liftoff later this year. Quote, a positive BTC price not going parabolic is that it continues to develop in a relatively stable technical manner. Consolidation and then renewed strength going into the fourth quarter, a manic market at a later date would see higher prices than if it came earlier. Says Dave the Wave recently predicted that Bitcoin could fall to as low as $50,000, where it will likely find support at the 0.382 Fibonacci retracement level. All right, so now moving on here. Oh, but finally we get to a little bit of the gold news, right? So I was just the other day talking about this and how they're calling for a much, much higher gold price. I definitely can't wait to see that. I hope that's going to happen. There's a multitude of catalysts, but this article is titled, Bank of America eyeballs $3,000 gold. Oh, don't tease me, Bank of America. It says, according to a report released by the big bank, gold prices could potentially hit $3,000 an ounce in the next 12 to 18 months as the Federal Reserve begins cutting interest rates and rising debt drives economic uncertainty. Bank of America commodity strategist Michael Widmer said he thinks the next bull run will be contingent on a pickup in investment demand. Quote, if non-commercial demand picks up from current levels on the back of the Fed rate cut, the yellow metal could push higher again, unquote. Widmer said this will likely happen when there is more certainty about Federal Reserve rate cuts. He said a pickup in ETF inflows and increasing LBMA clearing volumes are signs to look for. ETF inflows globally were positive for the first time in 12 months in May. The Bank of America report said central bank gold buying will remain. I told you. I said this, and we read a bunch of articles that led us to this conclusion. Now listen to what Bank of America is telling people. The Bank of America report said central bank gold buying will remain a crucial factor supporting gold prices, which means they're propping them up. And I must suppose that that's what they're expecting. Like I said, I believe that as well. Because they need to protect themselves, because something big is coming that they need to protect themselves from. Many of these large banks have said they're going to continue buying record amounts of gold. At least that's their intention. We have to wait and see if they're actually going to do that. This is last year, central banks added a net 1,037 tons of gold to their reserves, just slightly above the record of 1,082 tons in the previous year. According to the most recent World Gold Council Central Bank Gold Survey, that appetite for gold isn't waning. 29% of central banks indicated they plan to add more gold to their reserves in the next 12 months. The WGC said it was the highest level since the survey began in 2018. Whitmer noted that de-dollarization is driving this central bank gold buying spree, especially in China. Quote, while the motivation of individual central banks owning gold may vary, many reserve portfolios have one thing in common. The share of USD has been declining, while gold holdings have risen. Message. The People's Bank of China has added around 8 million ounces of gold to its reserves since January 2023. Meanwhile, the Chinese central bank has divested $102 billion in U.S. treasuries in the past year. Getting rid of that dollar. The Bank of America report highlighted bond yield volatility as another tailwind for gold. Whitmer pointed out that the U.S. Treasury is flooding the market with bonds as borrowing surges with the ever-widening deficits. And the market is having a hard time absorbing all of the treasuries. We call that also. I said that a long time ago. Remember I said, who's going to buy all of this? That's the way I put it. Who's going to buy all of this? And now we see they're having a hard time finding buyers. There's just too much to go around. Anyway, Whitmer said the bond market is, quote, one shock away from not functioning seamlessly, unquote. That's an eye-opener. Quote, increased macro uncertainty today may pose an even greater threat to market stability in a context where growth in government debt has vastly overwhelmed the intermediation capacity of the market. If demand for treasuries continues to ebb, yields could rise even with Federal Reserve rate cuts. Higher yields typically create headwinds for gold since it's a non-yielding asset. Whitmer said gold prices would likely fall initially with rising bond yields, but, quote, the search for a safe haven asset will ultimately divert flows into the gold market. I agree with that. Nothing safer than gold in my humble opinion. So the yellow metal will then likely pick up, unquote. It says, quote, long-standing inverse relationship between gold and rates has become more tenuous already. And in our view, this is unlikely to change going forward, unquote. All right. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.